Okay, so let me start with Charles. We do a quick introduction round, and Charles, if you can introduce yourself, because I think Paxos is one of the initiatives in the digital asset space that got a lot of attention last year.
My name is Charles Cascarilla. I'm the CEO of Paxos. And Paxos, we really look at ourselves as creating financial market infrastructure for the open financial system. And we do this by having a trust company in the state of New York, which is very similar to a bank. It's how infrastructure is historically set up. And it allows us to hold assets of any type of value and be able to tokenize them, which means really put it on a blockchain. And today we hold people's crypto, we hold people's cash that we tokenize. And we've done this with some partners like Binance, Wopie, and are on our own. We have $400 million of dollars that we've tokenized. We do it with gold. So we've created a gold token, and we're also doing this with US equities. And so we've tried to do this across a variety of different types of asset classes where we're the infrastructure to hold the assets and then to be able to tokenize them.
Okay, Stefan?
Stefan Leithner, I'm the chairman of Clearstream. That's the capacity. I'm on the board of Deutsche Börse, looking after our post-trade and our data businesses, basically. So Clearstream is a 14 trillion central depository in terms of securities. For us, the entire theme and the technology move is really critical. I mean, we see obviously what's going on. We try to shape it in many of the areas. I think many asset classes have good use cases around tokenization, and we'll talk about that later. But for example, we have gone live to the first of your trends in terms of going into production, in particular around collateral management. I think it's one of those very exciting areas where we have a low degree of liquidity so far. So I also believe it's very important to operate in a very use case centric way. You know, just changing the entire landscape of securities is just too unlikely. So that's my opening statement rather than background, but hope it hasn't disturbed your flow.
Excellent. Charlie?
Good afternoon, everybody. Thank you very much, Oliver, for organizing this and to the conference. My name's Charlie Berman. I'm the CEO of Agora. I think I'm probably the newest entrant to this august field. I'm not a technologist. I'm a banker. I spent 35 years in the bond markets, so I'm very interested to actually start to deal with, I think, Oliver's first point about the slow adoption. So what we're seeking to do at Agora is to use those elements of a blockchain, specifically in our case R3's Corda, to build an application which initially enables the existing world to benefit from the power of the new digital environment. And in the first instance, this is focused on workflows and processes which can be applied today, not at some point in the future. And we hope very much to see the first applications of those being achieved during the course of this year. But unlike some of some people involved in this space who are looking at workflows and processes, we're equally, if not more, interested actually in the medium, longer-term potential of embedding smart contracting into how bonds are managed through their entire life cycle, and using that to cut down substantially, not just in the reconciliation and manual inputting that takes place on workflows, but also for how bonds actually perform in the future, performance of life cycle events, payments of coupons, checking of selling restrictions, but also to take advantage of the ability that on-ledger instruments have to be able to query an object, to be able to get information from it, and for that object to receive information. So we're a very ambitious project. It's a long journey, but we hope very much to be implementing real-world applications during the course of 2020. Thank you.
Luc?
Hi, everyone. So I'm Luc Falempin. I'm the CEO at Tokeny. We are a Luxembourg-based fintech. More than 2 years old already, which is amazing in that space. So basically what we do is helping financial institutions to represent assets on the blockchain. So we work with investment banks, asset managers, funds to digitize their securities. We are a tech provider, So we basically provide solutions to issue, manage, and transfer the securities on the blockchain. And last year, we welcomed a new shareholder in our company, which is Euronext, bringing us a new dimension to be sure our technical standards are becoming standards for the whole market.
Thibaut?
Thanks, Oliver. My name is Thibaut de Maintenant. I've been working for 25 years in capital market infrastructure. And basically, I'm the CEO of LiquidShare. LiquidShare I started 4 years ago. The reason why I say 4 years ago is because to create a consortium, you need a lot of negotiation. Here we're talking about network, we're talking about ecosystem. And it means that you need effectively, as competitor, to increase the cooperation angle. So to get the big institution into LiquidShare, it requires 1.5 years of weekly negotiation, and the creation of the company in 2017 with BNP, Société Générale, Crédit Agricole, Caisse des dépôts et consignations, Euronext, Euroclear, IFS, and one asset manager called OFI Asset Management. So basically, it's the entire value chain of the post-trade, which is represented. And then since 2.5 years, we've built a new infrastructure, a new capital market infrastructure to solve the issue that, the old issue that we all in the room have been facing, especially the first one being, when you want to raise capital as an SME, then it's most of the time it's not democratic raising of capital because it goes to private equity, and individuals in the planet, it's very hard for them to benefit from the growth of SME. That's the first point, first problem to solve. Second problem to solve is if you are listed on a stock exchange and you don't have the means to pay for all the intermediary, you have no clue about the new investor. Okay, because there is too many intermediaries into the chain. The third one is, as a regulator, you have effectively put a lot of new rules and ask all the players to give you new regulatory reporting from each value point of the chain. And here what we are providing is a solution for that, where you can pull the information. And finally is about reconciliation. All this post-trade ecosystem every year has massive project to stop reconciliation. It has been offshored since a few years now. And every year we say, okay, we don't want any break. We are going to have 0 break this year. And every year, all the parties in the chain effectively do reconciliation. So that's what we are effectively the problem that we are solving for.
Thank you so much. I think the first topic that I'd like to start is really, what is digital assets? Because everybody is thinking about crypto assets, etc. And we are talking about a fully regulated business. And I'd like to ask the panel here, exactly from their point of view, how they define the digital assets, especially it's sometimes also really depending on the jurisdiction. And maybe, Stefan, I will start with you, because you're also executive member of the board of the Deutsche Börse, the German stock exchange, a fully regulated market infrastructure body. So if we're talking about digital assets, so how would you describe or define that? Because I think it's important, because it has right now nothing to do with crypto. If I talk to exchanges and banks, there's something that just try to stay away. Maybe you can explain also from your perspective, especially also from your market perspective, no?
Well, the starting point is, as you point out, we are regulated in every facet of our business to a large extent.
Yeah.
And therefore, the starting point for looking at digital assets that we look at is clearly from a security side. It's anything that starts with the securities element, and MiFID is a good starting point for how to think around what is security at the end of the day, is a relevant dimension from which to start. Now, certainly this box can be opened in many directions, but I believe that the importance of creating the trust that is so important for all, the entire topic, needs to start from a legal base that is anchored in existing frameworks.
Yeah.
That's why an important distinction that we are very articulate around is the distinction between the wave that was there around cryptocurrencies and an enormous amount of uncertainty that was created, and moving it back to a much more narrow definition, And I also believe that the effect of a network that is well administered at the end of the day and that is properly anchored, that has a true platform character, is a very important next step that we all should work towards, besides what are security tokens or what are security digital assets. And then secondly, as I say, how are they operated at the core? In ideally a sort of a network that has a clear set of trusted parties.
Yeah, Charles, because I'd love to also get your definition, because you were the first one in the US to get a SEC approval for your security tokens. Can you describe that also from the US perspective? Because that's also, the SEC is very clear about that, no?
Yeah, and so what we received was a no action letter from the SEC, which allows us to clear and settle securities, and we'll be going live with that shortly with a number of tier 1 banks. And SocGen, Credit Suisse, Instinet, Nomura, and there'll be some others who will join. And so that no action letter period allows us to do a limited number of securities, a limited amount of volume that'll be tokenized equities, and tokenized cash that'll be settling against it. And we'll be working towards getting a clearing agency registration, which will allow us to really be able to handle natural flow. And what we're trying to create is bilateral settlement, removes the CCP, the costs, and the capital that are tied up, about 80% capital cost savings, by removing the need to use a CCP versus having bilateral settlement. And but it's still happening on a private blockchain. It's not happening on a public one, mainly because you get some benefits, clearly from going from a centralized database to a decentralized one. But there's even more benefits when you go from a private to a public one. But you could never put US equities on a public blockchain today without absolutely crashing it. So it's kind of a moot point about whether or not assets should be on a public chain versus a private one. When you get to the scale of US equities, the answer is going to be private. Maybe that changes in some time frame that's fairly far off, like 5 or 10 years. But I do think being in a decentralized environment creates a lot of benefits for the bilateral participants to be able to not just save costs and save capital, which is really relevant, but even to be able to rethink how they do funding through repo, through securities lending, and that allows you to come up with new products and really reimagine your business and fundamentally maybe change your back office. So when you think about big capital markets firms, there has been a real headcount reduction. And I think Euroclear did an analysis, 15% reduction in front office costs since the crisis, almost no reduction in back office, middle and back office costs. There's been offshoring and other things, but there's increasing compliance costs. To really be able to change the entire way the middle and back office works needs a different technology stack, I think.
So Charlie, if I hear now it's fully regulated, you need the license, it's a platform topic. It's depending on the jurisdiction. Is there anything else you would add to that definition, digital asset? Again, because there's a lot of confusion in the market sometimes about what's digital assets mean. Yeah, Charlie.
So, sorry. So, as I mentioned in the intro, we're in the initial point, we're working on the existing markets. Very specifically, we're focused on the existing market in international bonds, some $4 trillion a year of new issuance and 25 trillion plus of outstanding secondary markets. We believe that by starting to make changes in, Charles has mentioned the huge cost associated with the servicing of those markets today. If we can introduce the financial institutions towards the sort of savings and efficiencies, not only in the back office, but in providing added value to the front office, who are very hard pressed. They are having to do more with less, and there is an increasing juniorization of that front office. So the benefits of blockchain, broadly speaking, should not just be somewhere out in the future that have to be conceptualized. They're very tangible and they can be obtained today. So as our job, we're a software provider. We're a collaborator with all of the existing organizations that bring a bond from inception and take it all the way through its life to redemption. By addressing some of those processes that need addressing today, we believe we can help pave the way for the broader adoption of native digital assets, and where we can get really interesting and get even more savings because of taking bonds from being rather helpless to being smart, and that's our goal. But I think we feel very strongly that we need to help all of those organizations, whether they're banks, the ICSDs, CSDs, custodians, IPAs, in this very complicated long chain, to be able to deliver better products and improve their own efficiencies.
Let me pause here, because I think it's important to recognize that it's not only a regulated new business, new platforms, etc., bringing new ecosystems together. All of us, you already touch different assets. And meaning, you started with bond, and Charles more on the security side. If I'm not mistaken, Thibaut more on unlisted equity for SMEs, etc. So in my experiences talking to these players in the industry, market infrastructure providers, etc., is always the question where to start. What's the first asset class? Is it bond, equity, structured products? Is it unlisted equity, etc.? Maybe Thibaut, why did you start with unlisted equity for SME? And I will go back to Luke also from a Luxembourg perspective, and the rest can already think about, because that's, I have to say, that's the first question that I'm reaching if we're talking about defining a digital strategy is, what is the asset that we like to tokenize or digitalize first? And because there's a lot of links to regulation and technical implications, etc. So maybe you have more insights why you want to start on the SME side.
Yes, thanks, Oliver. When I mentioned the 1.5 year of negotiation, that was a key topic, where to start.
Yeah, exactly.
And then the decision, and that the reason why I joined, was effectively to pick up something where first you have real pain points. Okay, because it's not about technology, it's about pain points on the infrastructure to be solved. And typically, if you look at, again, SMEs listed, because it's not only unlisted, but it's listed as well. If you look at the SME listed, you have big pain point on the big infrastructure today. That's the first point. The second point is the size. We'll see, you showed effectively the 27 trillion by 2027, if I'm correct.
Yeah.
And to obtain that, you need something, a very big event like central bank digital cash on blockchain.
Yeah.
And this is not going to happen next month.
Yep.
Even if Denis is going to say something, I guess, this afternoon. So I'm looking forward to that.
I will press him.
So if you go for the assets, typically like fixed income, then the shape of fixed income is really huge. So you will, 10 million is nothing in that field. So you might have a problem on the cash leg here. So that was the second reason. And the third one is really about what I mentioned at the beginning, is the fact that we've been turning around the problem of raising capital for SMEs and for individuals to benefit from there, what we call democratic fundraising, and for individuals to get from here.
But maybe
it's very difficult to
maybe
get
I
that.
can tell you, I see those projects in other countries. There is, on the SME side, less demand. Not sufficient demand. Why are you bullish on that topic?
I think there is massive demand, actually. If you have an SME, how do you think you're going to qualify for private equity? Only 3 out of thousands are going to be selected. It doesn't mean that the 97 others are not good, and they can't raise funds today.
Look, what's your perspective on the asset class?
It's indeed the big question. So we try to focus on private markets, because on private markets you have almost no infrastructure, so you have a big need for this infrastructure, and blockchain is there. If you use a public blockchain, it's a shared IT infrastructure that you can use today with a very low cost. So we focus on private markets. Half of these private markets are private equities. tokenizing a small startup doesn't make much sense because the value of a startup is very undefined. It's what you believe it will become. But for pre-IPOs companies, it makes sense. A lot of companies want liquidity, want to raise funds, but they don't want to become public, to spend 1 or 2 years to become public, to become listed, and then to have all of the reporting burdens and so on. So there is a need for this private company.
On the private equity. Stefan, where you start?
I would start on the collateral side, if I'm blunt. And the reason why I say that is Charles has rightfully said, what are the real drivers? You know, the drivers are not too esoteric. They're very much big players in the industry that see efficiency and inefficiency points. And the inefficiency of the immobility of collateral is one of the most important topics. Yeah. That's why we did start on the collateral topic. That's why we've, part of the consortium around HQLAX, and that's why HQLAX went live in November. That's why we have seen the first transactions. That's why we see a strong pickup among the big banks and the big sort of custodians. I also believe that the bond space, and that's the second dimension I would add, is the element of where do the smart contracts really add a lot. Yeah. It's not the one-off. I mean, the collateral management is not complicated from an asset servicing dimension, obviously. It's important to tokenize the baskets and all of that. The bond space is one that has a nice blend of complexity and non-complexity around the asset servicing. And therefore, the smart contract contribution will be big. The real price, if I may just conclude, however, is those areas where you have today unbelievable inefficiency. Look at the investment fund space. How inefficient is the entire setup around the transfer agent environment, and it's not making anybody in the industry happy. This is not a profitable area. People need to do it. So they will go after those buckets fairly soon. So therefore, there are 3 categories, if you want. Biggest impact for the buck, collateral space. The next one is easy to do on a smart contract basis, because that's a real value added, much more than distributed ledger. That's the bond space. Yeah. And then lastly, big pockets of cost that nobody is happy about, nobody will defend. And the investment fund space certainly classifies for that.
Charlie, why did you pick arts or gold for your first project? Why did you go for bond? Is that the same as Stefan, the reasons that Stefan mentioned? Or?
There's a very simple answer to that. Bonds are the only thing I know anything about. And I'm not good for anything else. So hopefully after I did my first bond issue in the mid-1980s and as a bag carrier. And I remember sending faxes to Chiamenti in Rome, trying to get documents signed off, and then heading down to the printers at Donnelly's in London and having an overnight printing of red herring prospectuses, and these being boxed up and sent round to different centres. We've moved a long way from that, but I would argue we've had very little change or innovation in the bond market since the early 1990s with the introduction of the global bond. Since then, we do the same things all the time, from inception right through to redemption. I've been particularly focused on the origination and underwriting side of the market. We still send around documentation via emails, PDFs, Word documents, Excel spreadsheets. That creates the underlying data from which all of the downstream providers do their functions, and they manually input that data into their own siloed databases, and then they spend a fortune reconciling those manual inputs amongst each other in order to, and even if errors aren't made, they're still checking. So we can do a lot better in terms of the processes. For me, it was easy. Bonds are a huge asset class. There's a massive, definable group of people that care, and I sort of understood what the problem was.
Let me summarize Stefan and Charlie's messages here, because it's not all about how we store our information on the blockchain and which asset class we start to tokenize or to digitalize at the end is that we both mentioned, and the rest also mentioned, that we manage the life cycle of a financial instrument, like the term sheets, like the corporate actions. We can link this to a piece of software that includes those execution rules. And that makes the life of the whole community much easier. We will have much more information that maybe we can monetize in going forward. And I think that's something that we have to stress. The battlefield, from my perspective, and you confirming that, is not on the blockchain technology side. It will be, can we get an agreement how these smart contracts will be standardized? And in the moment we enable that, I think we will see a massive change the way how we operate. It's a fair summary. Is that a fair summary, Stefan and Charlie? Is that how you would stress that? Yeah.
Yes, and in the industry, if I may just pick up on that, the industry development shows that. I think the blockchain layer has dramatically changed in the last 2 years.
It will, yeah.
And you see industry leaders like digital asset holding, which again in transparency I'm on the board of, but really focusing on the smart contract layer and really adding value around that. And that's what I think is really the most important field.
Could I just say that I do believe that the ledger is important. I believe it's an incredible advance for people collaborating about making contracts, to be able to see the same information at the same time, to be able to electronically sign those agreements, and to move those agreements around the system in a much more efficient and safe way. So I do think the ledger is important, and by starting with the ledger, our ability to introduce the smart contracting into those processes is the starting point.
And then I think going back to Charles, I think you mentioned in your first statement, you know, there was a reason why you built a permissioned ledger. So it's a closed environment. Maybe you commented on that, again, what you heard from a smart contract. I know that you're working with Credit Suisse and other financial institutes on your projects. And I'd like to get also a segue into the cash side. You have a stablecoin.
Yeah, so I actually think the most important asset to do is cash. And the reason is that's what moves against every other asset. And so if you don't do that, you're missing the fundamental movement. And that's why we went out and created a stablecoin, and we've done it now for others, and we're working with a lot of other firms where there's a huge benefit to having cash on an open ledger, a public open ledger, but even a private ledger. Whether you're going to settle securities or you're going to settle a P2P transaction, whatever it might be, you're going to need cash on the other side. And so in the case of securities, especially high volume securities, you're going to have to put it on a private chain. So you have a private stablecoin in that instance. So that's still really important. When I think of the benefits of what does a blockchain and what does smart contracts bring to securities, it's really kind of two buckets. One is you could increase liquidity, or you can increase the operational efficiencies. And I think largely, you know, as you get into more liquid asset classes, it's not going to be about liquidity, it's going to be about operational efficiency. So basically, the more liquid something is, probably the more operational benefits you're going to be bringing. There are certain asset classes where there's not very much liquidity, but there's also, which can be brought to it, but there's also operational inefficiencies. But it's kind of difficult because I always look at small cap stocks. And I see small cap companies, and they trade by appointment. They're not very liquid, and yet they're listed. So I always wonder how much blockchain can change liquidity. I think it can help. I think it's really going to be in the operational benefits that it's bringing. It can definitely improve liquidity, so I don't want to imply that it can't, but there's just so many examples of instruments that exist today that are illiquid, even though they have access to liquid trading venues and other sources of liquidity. So I kind of have really veered towards where there's operational efficiencies. And so if you look at, say, U.S. equities, which we've spent a lot of time on, it's a very highly liquid asset class. It's ostensibly very efficient. It's just not efficient in absolute dollar amounts. $20 billion of trapped capital, you know, probably $700 million of inefficiencies and costs. Those are huge numbers. You know, big numbers for individual firms. You can free up billions of dollars for tier one banks. You know, tens of millions of costs. So that's why we focused on equities. But I have to think the most foundational asset's cash.
So looking at, and you mentioned this from a cash perspective, at the end, LiquidShare, what you're building up it's a hybrid model because the cash is still in the traditional way. Is that a fair statement?
What we've done right now is effectively to change that, Oliver. Because we need the cash on the ledger, and I agree this is the most important things to get. Right now we've done a big pilot with 20 institutions, 40 people, where effectively we show a completely new workflow. And for the cash, effectively, we had an issuing bank we're playing the role of a cash issuer and creating cash into our infrastructure and our blockchain infrastructure, and to be able to do the DVP. What point about the smart contract? I think what is fundamental before talking about smart contract is what is the existing workflow and how do you want to redesign the workflow? And here it's very interesting to see that the model that we've designed after, I think we went through 100 of workshops with all the institutions at the different various cycle. We redesigned completely the post-trade, and we had effectively to go to the very details, i.e. being able to understand who are the beneficial owner, being sure that they're registered at this level, and then when the order coming through the broker hit the stock exchange, to resolve that into the infrastructure, so that the settlement is without CCP and without clearing member as well. You go straight from the buying custodian to the selling custodian. Yeah. So it's a massive revolution. And at the end, the issuer, who today doesn't know who is trading on his stock, can have a real-time view of who is the end investor who that buy and sold. So it's a massive change.
Luke, what's your view on that?
We already have all of these solutions to issue, manage, and transfer tokens, as I said. So basically, the cash leg is indeed very important. It's the last piece to really move this industry. For example, we have a decentralized exchange technology, where on one way you have securities, tokenized securities, so you can control every transfer of the securities and apply compliance automatically. And on the other side, of course, you need the cash. So we need the cash on the blockchain. So because we use Ethereum public, we can use any stablecoin out there in the market. But of course, we want a stablecoin issued by a credible bank or institution. And I think it's the year where it will come.
And Charlie, I think your model, your project is more, working with the traditional payment infrastructure. Is that fair to say, or you already often think about digital?
We're very interested in the future, but that's not for us to solve. We're not going to be the ones that solve cash on ledger. The way we are building our software is that the day that happens, we'll absolutely welcome it and embrace it. I repeat again, our efforts at the moment are about producing a product and products which can be used by the existing incumbents today to start to make the changes. And so I'm not agnostic on the solving of full tokenization, but I think our part in this puzzle is to bring about, be part of those applications which can be used in the very near future and act on existing functions and markets.
So what you're saying, it's interesting listening to Stefan and also Thibaut and you. At the end, what you're saying, we're not going to from white to black. We're going to more step-by-step phased approach in a hybrid model. So you're changing certain parameters in the bond business.
Yes.
No, you're not touching right now the payment. You're not touching the CSD topic. No.
We need to work with all of those. You can't bypass.
And then over time, you. No?
But I think Stefan mentioned a model for us in many ways is what HQLX have done. They are not seeking to, they're seeking to assist the current market participants to do something better and more efficiently. And I think we are operating at a different part of the bond space, but actually the assets which HQLX are focused on we're looking at how those assets come into existence and move on. So I do think we're all trying to deal with the same thing, but it's about things that can be done today rather than tomorrow.
So this brings me to the next question, maybe Stefan, from a Deutsche Börse perspective. I this is a study out there how the volume maybe will evolve. That means, my understanding, also working with these infrastructure providers, it's not happening immediately. So what's your perspective on timing and volume-wise? Is that something inflection point 21, 22, or what's your take on that? Because it looks like here the panel is convinced this will happen. The question is when and when we see a significant shift?
I do believe that the shift is two dimensions. One is the supply side, meaning the quality of technology. What does it really change? And the other side is we just need to be very cognizant that we operate a market that has an enormous investment and that is basically players, in particular the banks, under unbelievable pressure. So their ability to invest and overhaul just because you bring a smart idea is often not just constrained by whether it's a good idea, but also by practical realities. What is the IT capacity they have? What do they need to focus these IT capacities on? So unless you go into a new market, a niche market, where you get new players and you mostly operate with Fintech, the entire sort of legacy element of the industry, and by no bad intent, you will meet them like me on these panels, and they will talk with great excitement about the possibilities. They will also quantify the amount of change. But at the end of the day, they are the key providers in the market, and their squeeze on their budgets by the margins and the capacity that they have to make change happen is just limited. That's why it will take longer. I do not believe we will go through this in a 4 or 5 year horizon. I think we all should therefore also prepare for a full need to maintain legacy systems for another 15, 18, 20 years. And we need to have secure, stable, and trustworthy systems for the next 15 years in the legacy environment. And that's very, a concern of ours, because we believe it's critical that all players continue to keep IT security and these topics at the front of their mind when it comes to those legacy systems.
So what you're saying to the chart, it's too aggressive, the projection?
Yeah, well, I don't relate to the specific number of 27 billion. I would just say as a general connotation, any of those projections, it should look at a big bank's IT stack and portfolio and ask the question, how many IT people do they have? So if you have 1,000 people, and we face that problem every autumn, and then you need to decide, how much KYC overhaul do you need to do, and what do these 1,000 people do? Then you say, I would love to hire another 500. The reality is they're not around those 500.
Okay. Charles, what's your views from your perspective? Do we see a much more faster adoption, or you think it's also a question of years?
Well, I think it's definitely a question of years. I don't know, what's the saying? Things happen slower than you think, and then they happen faster than you thought. So I think it will go slowly, and then it'll go very fast. And I think what Stephen was talking about is really true, which is, I think that's the whole reason why there's so many startups. Because you have capital and you're specifically dedicated to creating innovation and disruption. That's all you're trying to do. You're not having to maintain systems and regulatory structures that are legacy, and you have a certain mindset that creates innovation. So I think there's some component of that, but I think 27 trillion by 27 seems not unreasonable. There's 600 trillion of assets in the world. I think they'll all end up on a blockchain. I think maybe it takes 20 or 30 years. But if you think about cash, you think about certain commodities, and then you start adding in securities, I think it's very achievable by 2027, but it might not be linear. It could be very non-linear, but it could happen relatively quickly. We certainly hope there's 40 trillion of U.S. equities. We certainly hope that we'll be tokenizing a vast majority of that by 2027.
Charlie, so what's your perspective on the time horizon? Is it Can you take the microphone, please?
Every time. I don't believe there's a big bang. I don't believe, and I completely agree with Stefan and what Charles is saying. It isn't a question of turning something off and turning something on. If you work in a crypto area or a pure digital area, you can. It's rather like solving a complex equation. You can, if you're smart enough, you can bring it down from 100 characters down to 20. We can't do that in the existing markets. They're very complicated. They're highly regulated. There's an enormous amount of capital in them. But sometimes when people talk about this, it's like all of those existing institutions are either stupid or take the turkeys don't vote for Christmas approach, which is they don't want change. I don't believe that at all. I believe these organizations do want change. They do want to see how they can bring in meaningful change, that they can afford that change, and that these things will happen.
And look, what's your perspective on timing? Are we It takes another
Indeed,
10
I don't
years?
think it will be linear.
Linear, okay.
But yeah, private equity will take time, but other industries such as real estate can be much faster.
Much faster, okay.
We see a lot of traction already in real estate because it's not securitized enough. Usually, as an investor, you buy another apartment, but you don't diversify your investments. And we have already very concrete projects, like in Luxembourg, for example.
Thibaut, what's your take on when is LiquidShare exploding in a positive way?
On a positive way, 2022, because you need first to effectively digital central bank cash on your blockchain. That's the first things you need. And the second thing you need is effectively a safe environment in terms of risk and regulatory, so that you can operate a blockchain in that field. And the third one is going to be effectively the realization that am I, as the head of infrastructure in my banks, do I think that I can replace all my system with this new way of doing or not? If the answer is not, then effectively it's going to be extremely difficult to do a change. But if the benefit that we mentioned before, especially on the regulatory side, where 80% of your change the bank budget is spent on regulatory stuff, if you're able to say, well, in that new environment, actually, the regulator can pull the information that it needs, and it doesn't need you to do anything, then I do think it could be extremely fast. You need a bit of precondition.
Good. We have, I think, time for one or two more questions from the audience. I'd like to open up for the audience too. If there's any question you want to raise, I think you asked yesterday already a question. Maybe you have another question. And I think we have a microphone coming. So I think in the first row we have the first question. And because I'd like to get some feedback from the audience about a very important topic that will initiate a structural change of the industry, no?
Yeah, you just showed us your email address. It was just 1 second. Can we get it back to get your address?
We will display my email address in a short minute. I think the team will do that. Any other question?
Another question about the legal point of view. When are we expecting a law saying that the blockchain is valid if we go on court? Is there such a law expected in EU saying that, okay, if we got an information in the blockchain or DLT, this is valid in front of a judge?
That's a good point, yeah.
Well, first of all, I mean, we do have that, and it's, you know, Luxembourg is a great example of that. They have been certainly a leader in the European Union in that progress. That's why what we have been doing around HQLAX is not by accident in Luxembourg. Not because we were born there and it's a great country and nice people, but because they are very innovative, they're very minded in terms of making that happen. Now, the second point is the European Union will travel down that journey, and it will certainly be a priority in the second half of this year, I believe. The German presidency agenda will certainly put this high up, because I do believe, and it's a point that we have lived through since the inception of Clearstream, is the distinction between, at the end of the day, also what is commercial bank money and what is central bank money. And therefore, you know, the stable coin is a good idea, but let's be realistic. You know, at the end of the day, we will need central bank money to make this really a system that makes a difference. And Europe, for example, has both of those have their reason for existence, but a stable coin that is only commercial bank money, I think it will not achieve the same benefit for the system.
You have the same law as well in France. I think you have domiciled after, she will talk about that. But effectively, when you register in a DLT, then it's in the law that that's where is the property. So that's why I give you a lot of comfort in terms of reconciliation, because if you have a distributed system and your equity is registered into that registered system, then we all look at the same data and we know who is the owner of the stock. So
let me summarize, we're coming to the end, and we will display my email address in a minute. I think we are at the beginning of a massive disruption change in the capital market. I think if you see that this regulated business will affect existing and new asset classes, it will affect the entire security processing front to back. It will new businesses will emerge. It needs a hand-to-hand partnership with the regulators. the cash side has to be tackled to be really go for an atomic settlement. And so it's something that is exciting. It will take time. I fully agree with our panel here that we are in a connected world with existing APIs and systems, and I think that needs an organized change, etc. And that's something that will not happen overnight, but it's exciting. It is an exciting change over the next few years, and my advice is think about digital strategy, where you want to play in that value chain, what kind of asset classes you want to go after, because the build-up of knowledge is absolutely critical for the next few years to understand where you want to play as an institution, which ecosystem, maybe lending, maybe bond, etc. you want to inject, because all the topics are ecosystem related, network related, and finding a place that you want to inject yourself needs understanding, knowledge, etc. So that's something I want to urge everybody. And I think the good thing is we got confirmation also for the rest of the agenda. So we will talk about stable coins, digital currency with the central banks later on. We talk about privacy and compliance later on. We have the first deputy governor of Banque de France here. We will talk about that. So exciting. And I want to thank the panel for this really great insight, and please give them a big round of applause. Thank you so much for joining us.